Good morning, everybody. Not sure what happened there. I'm Joe from Signal Centre, joined by Steve. How you doing, Steve?
Hello, mate. I was just waiting for the big sort of like parade of Signal Centre.
Yeah, I
Flying
don't
across the
know. I
screen.
reckon you're clicking the buttons back there and changing things.
I'm not touching anything. I'll hold my hands up here. Look, see,
Okay.
it's still happening.
Oh, it's no good now. Yeah, anyway, we are Signal Centre. We're talking ball this morning. We're going to go through all the latest headlines in the markets that's been moving price action over the last 24 hours. We're going to talk about a load of charts, and then we're going to talk about what we can expect from the day ahead, as usual. So if anybody wants to get involved, if you want to post up on the stream, if there's any markets you want us to take a look at and analyse for you and give an opinion on, we'd be more than happy to do so. So please post those up. Yeah, let's get on with it, shall we? Let's take a look at those headlines. So first up, core Eurozone inflation hit a fresh record high yesterday. The Eurozone consumer prices increased 0.8% for February, with the headline inflation rate declining slightly to 8.5% from 8.6%, but this was significantly above the consensus forecast of 8.2%. The underlying inflation rate increased to the record high of 5.6% from 5.3%, and again above market expectations of 5.3%. So the markets in Europe now have moved to price in a peak rate of 4%. This is where we expect interest rates to get to. There was also a strong increase in US labour costs. The revised data on unit labour costs recorded a 3.2% increase for the fourth quarter of 2022, with a 6.3% annual increase in costs. The increase in labour costs was much higher than the original estimate, which has been recorded an increase for 1.1% and an annual increase of 4.5%. The higher rate of increase in labour costs reinforced fears that the Federal Reserve would have to tighten policy further to bring inflation under control. So no surprise then that the hawkish Fed rhetoric continued. One of the Fed governors stated that the central bank needs to raise rates beyond the 5.1 to 5.4% view, and that progress on inflation had been slower than expected, although he added that there were some reasons for hope, with a sharp deceleration in rent increases. US yields moved higher. Treasuries lost further ground with US data and further concerns over underlying inflation pressures. The 10-year yield increased to a fresh 3-month high at around 4.08% before a limited retreat to 4.04%. Okay, so BOE, the Bank of England, are watching wages. According to the Bank of England chief economist Peel, the evidence suggested that the economy has been slightly stronger than expected, and the pace of wages settlement was also slightly stronger than expected. He also commented that some high frequency indicators of wages had fallen quite sharply recently. There was some resilience in equities yesterday despite the inflation and Fed fears. The Asian markets also made headway, with China releasing another positive report with a stronger rebound in the Caixin PMI non-manufacturing index. The US dollar hit or continues to trade just below an 8-week high. It was held below that level yesterday and has edged slightly lower today as equities managed to post gains and defensive demand faded slightly. Today, we are focusing on the all-important ISM services release. The latest ISM services data will be released on Friday. This will be a key piece of evidence on conditions in the non-manufacturing sector. Consensus forecasts are for a headline reading of 54.5 from 55.2 previously. The price and employment data will also be very important within the release. Okay, so let's get on to looking at some charts. Steve's struggling a bit with connection today, so we'll do our best. If there's any issues, then obviously I can step in and help out. But Steve, over to you for a look at cryptos.
Thanks, mate. Let's see how we can get on with this presentation. If it's all a bit juddery, just take over and I'll reboot, mate, or something. Yeah, let's take a look at Bitcoin first. We've seen a quite aggressive sell-off overnight. The 1 o'clock candle here on the top chart, and that has resulted in the daily chart looking a little bit sick. We did have a little bit of a squeeze higher in indices yesterday. That helped maintain Bitcoin's buoyancy, I suppose. But we are looking at the fifth and final wave being complete after rejecting a move above 25,400. Overnight price action has moved aggressively lower towards the 22,400. This is the 55-day moving average on this chart. We've still got a load of support to come in the form of the cloud and 21,400, which was the swing low on 13th of Feb. 200-day, 100-day moving average, we've had a crossover there, which is positive, but that's way down below the 20,000 level. So a little bit of a way to go for that to sort of like kick in as a support level. Ethereum, this has also had the similar move. Obviously, tracked the Bitcoin, always tracks the Bitcoin pretty closely. We've broken through the support at 1560, managed to eke out a low of 1543.5 into the cloud, and again the 55-day moving average doing a little bit of a job of supporting there. We're down on the week about 5% on Ethereum, so not looking great. Resistance really coming in at 1677, but the major resistance up at 1730. Support below in the shape of the swing low again from the 13th of Feb down at 1470. XRP, very slow, these charts. XRP has done a bit of a job of holding this downward trending resistance. We've talked about this for a while now. We've managed to, price action has broken down below the cloud now, as you can see on this chart. Let's zoom in a little bit more. All the moving averages just above here. Since we've broken down, they've really struggled to get back above in any meaningful way. So we've broken down, hit a low of 35.46 that's cents, and we've bounced from there up to 36.5 cents at the moment. But yeah, looks pretty negative end to the trading week as far as we all are all normally concerned. A Friday, but obviously remember these guys will carry on into the weekend and trade Saturday and Sunday. So, but yeah, negative, down 6% on the week, 10% on the month, and yeah, we're still up 7% on the year. So year to date anyway. Let's move into commodities and take a look at gold. Gold had a little bit of a bounce. That's continued since the start of the week. We've got a really nice pullback here, and we're running into resistance at 1847. That's the sort of like major resistance that we've had over the last 2 or 3 weeks. It was a support broken down and now resistance 1847, and pushing up quite nicely. Yesterday was a little bit of a doji indecision day, but we seem to have sort of like taken the bull by the horns and rallied higher. From this Elliott wave chart, it looks like we're in the 5th and final wave of the move higher. Silver had a little bounce yesterday. Also, I thought my gun to head trade was going to play out. Was looking at this like this shooting star candle. We haven't managed to break above it yet. 2118 is the swing high there. 2104 trading, but a really nice start. Yeah, and the sort of like the sell-off pulled back. I was getting all excited, started to count my chickens on that gun to head trade idea, but unfortunately turned around. 2044 is the support, 2117 resistance, and there's further resistance up at 2142. And silver, crude oil now, that's projected higher as well since last Thursday. So we've had 7 or 8 days of sort of like overall positive price action. Managed to sort of eke out a high at 78.61 yesterday. We've broken above the pivotal level, we'll call it, within this range that we're trading on the WTI crude oil. Let's remove that and just see where the next levels are. We've got resistance up here at 80.72. We've also got the 100-day moving average and the cloud in front of that, and the major resistance coming in at 82.61. Down at support 73.82 to 72.58, but the major one is at around 70.21. But yeah, really nice sort of like week for crude oil. Overall, still remain bearish on it. The trend is lower. So yeah, apart from sort of like the rally over the last couple of weeks, still sort of like going to run into resistance. And we can see it as well here. We've got a nice upward trending support line that we seem to be trying to base out, although it is a triangle formation that we're looking at. Let's draw the trend line in to give you a little bit more. So this is the short-term triangle, bit of a symmetrical triangle down here, and looking for, it looks like we're forming higher lows. Are we looking for the breakout to the upside? Let's get rid of that resistance line in there. We're still similar sort of price action to the WTI crude oil. Cloud resistance above 100-day moving average, and the swing high 86.69, and just shy of $89 is the resistance above that. Support coming in the form of, we've got 4 supports, which are just swing low, or sort of the higher lows that we've been posting: 80.31, $79, 77.60, and 75.26. And to finish off the commodities, we'll take a look at natural gas, which has had a bit of a uprising, shall we say, since last Wednesday, really. And we've turned around really nicely, broken above the resistance that we formed at 268.5, and it's continued higher. Still got this big gap on the charts around here. Yeah, just getting that big gap on the charts all the way up around about the 430 level. So this is a nice potential bottom that we're forming, but I wouldn't get too carried away. 210 was the level that we bounced from, and trading 284. So a really nice bounce on the over really quite a short period of time. Nice, like 37% rally. That'll do.
Pretty
Donkey.
chunky. Yeah.
Yeah.
Okay, cool. Should we take a look at FX?
Yeah, let's have a look at FX.
Right, okay then. So we can start off with the dollar index as always. So yesterday we saw a decent push to the upside, but still trapped within the body of the previous day's price action. So pretty choppy stuff at the minute. Some big ranges, but not really going anywhere for the time being. So I've got a couple of arrows drawn on the chart to indicate where price may head. So we've seen a breakout of this short-term downtrend. Price is sort of stabilizing around here. Potential for a pullback to test the newly formed support at 103.62 for a potential rally towards the 38.2%. It may be that just goes straight there and tests it, but just sort of mapping out a couple of possibilities there. So it is holding up pretty well. Obviously, we've got these ongoing bits of news that are coming out with regards to inflation, which is remaining stubbornly high. So there is still, it would appear, some appetite for safe havens, and that's why the dollar is remaining at these levels at the moment. But I guess kind of undecided about where it heads next. So that will be impacting other markets. So take a look at Euro US dollar. So following the breakout of this wedge pattern that we saw earlier in the week, yesterday we posted some losses, didn't quite engulf all of the gains that we saw in the previous day. So that's pretty encouraging. In fact, we probably held around the support there, a retest of the broken wedge, and may indicate that we're going to see higher prices towards around 108.852, which will probably coincide with a pullback on the dollar index to that support level that we just mentioned. So looking pretty good, really, I think, on Euro US dollar for the time being, certainly for a correction to the upside following this move lower. Let's take a look at cable. That's higher today by almost 0.3% and still holding on to this support level that we've got here at 119.19. So we've seen multiple touch points of this level. So it's a pretty strong support level that we formed here. If this breaks, then it brings into focus this previous low here from back in January. And that potentially would confirm a double top if that level breaks. That's at 118.41. So that's a key level on the downside. If these start to break, then it pretty much brings into focus this 38.2% fib level, and maybe over the more medium term, the completion of a double top would indicate prices may fall as low as 112.36. But for now, it's holding this support level, so it's acted as support on a few occasions. Maybe that would be attractive for some scalpers or some day traders to maybe continue playing that level, looking for a bit of a bounce to the upside. Let's take a look at dollar yen. So again, that's trying to break through some key resistance here. This 38.2% fib level at 136.66 has been acting as resistance now for a few days in a row. Arguably, we saw a bit of a close above that yesterday, but we're back below it today with some fresh selling down by 0.3% as things stand. Potential for a pullback towards this new support at 134.65. But it feels pretty undecided at the moment and awaiting the next kind of move in the dollar, I guess, or unless there's going to be any major movements in yen. So that's still being trapped at that level. Let's look at dollar Swiss. Forming an engulfing candle as things stand at the moment. This chart actually looks quite similar to the dollar index, and it's broken out of this short-term downtrend, and looks to be in maybe in the sequence of pulling back towards this new support of 92.90 before maybe a move up to that 38.2% fib level. So it looks very similar to the dollar index. Let's take a look at dollar CAD. More range-bound price action here. Attempted to move higher yesterday, but closed pretty much where it opened, forming a bit of a shooting star candle. It's not really a shooting star as it wasn't at the top of the move, but in terms of its shape and structure, it looks like we had a move to the upside, but then failed to move higher and pushing lower today. So more sideways price action expected there. Looks like we're trading in a bit of a range, and maybe it's towards the top end of the range at the moment, providing some opportunity in the short term. New Zealand dollar versus US dollar. So this threatened to complete this double top pattern on the breakdown here on Friday, the 24th. We retested it and initially failed, but then finally broke out of that level, forming a bit of a wedge pattern as well, which indicates we could be in the process of a correction to the upside. So expecting upside corrections to be limited around 64.68, but still not giving up on this double top formation. It could be that this is a very limited rally to the upside before rolling over again to the downside. Let's take a look at Aussie dollar. So unlike New Zealand dollar, this hasn't completed a wedge, but potentially forming one on the daily chart. We broke down through the 38.2% fib level. That didn't really provide anything in the way of support, but it is now providing a resistance level as we attempt to recover that. If we look at price action over the last few days, we can see that it hasn't really gone anywhere. The bodies of the candles are kind of similar in size over the last 3 days. Prior to that, we had 2 dojis, so no real progress being made. So the next sort of move that we're looking for here is probably going to be triggered either by a breakout of this wedge to the upside, which may trigger a corrective move higher, or we'll see a continuation lower within that pattern, maybe towards the 50% fib level at 66.64. Okay, I've got a request to look at Euro New Zealand dollar, so I'm going to do that. Let's take a look here on the daily chart to start with. So price was capitulating really throughout this period here, trading in a really steep downtrend, then eventually broke out of this wedge, and now we're seeing a decent move to the upside. But that move has stalled at a 78.6% fib level, pretty much to the tick. We can see that candle there, Tuesday the 28th of February, rallied into that level before stalling and forming this bearish outside day candle. So this is where we make new highs and close below the lows of the previous day. So that indicates a turnaround in the short term, and therefore my bias would be to the downside on this in the short term. However, looking at the uptrend, we can see there's one in place there. So if that continues to hold, then maybe we'll see some buying support in the short term. I think that would probably be the level that I'd be interested in, maybe even that one there. If we get a closing break below 17001, then that is likely to trigger a deeper correction to the downside. And I think given that bearish candle there, the bias is for bearish price action in the short term. So a break there would really confirm that and likely to send prices a little bit lower. So a bit of a pivotal level here for Euro New Zealand dollar. If we get a break there, then lower prices are likely. Okay, more coming in. Euro sterling. Let's take a look at that. Robert, we haven't looked at S&P yet. Steve will be doing that shortly. So Euro sterling. Okay, so bit of a mixed bag here. I did have a bullish channel, which actually broke back on the 21st of February, and then prices have actually retested the underside of that and failed to overcome it. So it looks as though we've got some support in place around 87.83. Pretty range bound stuff at the moment. Maybe we've got a bit of a wedge forming here. We've got a number of touch points here on this short-term downtrend. So it's a bit difficult, I think, to find what to do either way with this. It's these two just tend to sort of cancel each other out a little bit at the moment. But that was a very bullish candle that we saw on Wednesday. But we do still have a sequence here of lower highs and lower lows. So the trend in the very short term, certainly starting from February, is bearish, and rallying into this level over the last couple of sessions may indicate that we're going to see a pullback within this channel and further downside maybe towards 87.83. Of course, on the flip side of that, if we get a breakout here through those highs that we posted earlier in the week, then that is likely to trigger further gains to the upside. So it's kind of at an inflection point here where we're likely to get a decent move either way, really. So a failure into this level suggests that we may see a move down to 87.83, a break above 88.96, and we could head back to those highs that we posted in early February, up at 89.80. Over to you, Steve, to take a look at some indices.
Lovely, thanks, Joe. Let me present my screen again. I managed to cut out. Right, let's start with FTSE. As Joe said, Robert, I'll get on to S&P very shortly. FTSE, bit of a sort of, I was getting all excited about this because we were really challenging this support line at 78.50, and we talked about it the day before. We were on the back foot. It looked like we were going to retest it again, but we didn't. We stalled in front of that, stalled around 78.74 and rallied higher. So FTSE just like kept on going. It's very quiet this morning so far, but yeah, it's taken out yesterday's high, so looks overall, it looks quite positive to finish the week. We've obviously got, normally we'll have non-farm payroll on the first Friday of the month, but this month it's been pushed back for a week, mainly due to the short month in February, really, and trying to get that extra week of data. So yeah, FTSE 78.50 support, around 80.50 for resistance. So yeah, looking really sort of like nice to sort of finish the week. DAX had the same sort of thing. We were on the show yesterday, we were breaking down towards these lows, and I was very tempted to go short of these, thinking, but as we were speaking on the show, we just had this like little bit of a hourly rally across the board, so it didn't feel like the right time. Obviously, I'd look for maybe better levels to get short. It felt like the move on the day was already done, and it seemed to work. It did cut back quite aggressively. We still got resistance above, coming in at 15,480, and above that we've got 15,550, and the all-time high sitting at 15,656 in the DAX Germany 40. Taking a look at, well, let's reverse it. Let's talk about the S&P first. I'll do a little bit of a deeper dive into this. So the weekly chart, we've had a little bit of a break out of the downward trending channel. However, that breakout doesn't seem to have lasted a very long time over the course of this chart we've got. This goes all the way back to 2022, the weekly downtrend. However, we are posting, as you can see, higher lows. This week has been quite significant. It's broke back down into that reverse trend line of that channel, and we have bounced from there. So we did post a new low, but we are finishing on a doji candle, which is a bit of indecision. So we're trying to work out whether this indecision is, hey, we haven't finished with the upside yet, or we've had a bit of a sell-off. Let's have a little bit of a rethink. Are we ready to go again? So overall, on the month of February, we had it reversed a large chunk of January's gains, maybe about 50% of it. But yeah, seems to have stalled here. Found a bit of support at the 39.18 level. 4,000 has always been a bit pivotal for me on the S&Ps. Let's take a look at what we played out, though. We obviously highlighted this potential double top when we broke the neckline at 4,048. This was on the 21st of Feb, broke down through there, and that was confirmation of the double top formation in place. And it played out really nicely. The measured move target was 39.33 on here. We managed to get down, as we just said, to 39.18, so broke it nicely. And the 100 and 200 day moving average are crossing over today. So that's really quite key for me. We've got this bullish hammer from yesterday. We're still above the Ichimoku cloud, which is a trend support. And we've reacted really nicely with a really strong positive candle yesterday. So again, I've had a couple of feelings this year when the indices have sort of like been supported and turned. Could this be another turning point. We've got the 55-day moving average just above 39.80. Obviously, the psychological 4,000 area. But let's just get rid of a few lines. Let me just clean this up a little bit. We've talked about the double top. Let's just get a few of these lines out the way. I'll even get rid of my lovely Ichimoku cloud, which I love, to make it a little bit cleaner. So now we've had the pullback put in place. Let's see what targets we could be looking at from a Fibonacci perspective. So a pullback towards just above 4,000, 4,016 would be a 38.2% fib retracement, which is a normal retracement in markets. So that wouldn't be a surprise getting back to there. And that's also ties in with a bit of a confluence area where we've had decent pivots and breaks from before, even going back all the way to here. So we had a swing high 17th of Jan, 18th of Jan matched it, tried to break up, but closed around the 40.15 level. Well, it actually closed was 40.16 on the 23rd. Did the same on the 24th, same on the 25th, and the low of the market on the 26th was 40.15. We did poke our head below it, or poke our toes below it on the 31st of Jan before the rally higher. So this is a significant level, 40.15, and so not a bad place to target from this bounce. And I wouldn't really sort of consider standing in front of this S&P train until we get to that level and maybe fade it. You know, like, I like to be a bit of a contrarian trader. So yeah, 4-hour chart, we're still in a short-term downtrend, looking to challenge that cloud, which looks a bit heavy above. So it's not going to be an easy ride for the S&P train drivers. And we, on the hourly chart though, we seem to be breaking free and forming a nice little bullish flag potentially. Why not? So a break above there could sort of like end up seeing a move, measured move target for that. Let's just draw the pole on there instead of getting the clever little Fibonacci tool on there. Something like that, targeting a move to 40.37, which is above the level we were just talking about. So bullish flag forming, nice little bottom formation, and support below around about the 39.50 level on S&P. Hope that's been enough for you, Rob. Hopefully you get something out of that. Nasdaq, similar sort of price action, and yeah, nice little turnaround. Let's get the daily chart up just so we can see. Again, on this automated Fibonacci Elliott wave drawing tool, it believes we're in the fourth wave, looking for the fifth and final wave. So again, bullish hammer yesterday around the 200-day moving average in Nasdaq. So a really nice turnaround in my eyes. Friday, I don't really like having positions overnight or over the weekend, but if I were to, this would feel like a nice little place from a risk reward perspective to target the next move higher. And Dow, finishing off with Dow, that's had a sort of like a little bit of a better ride. It's we got the bounce on Wednesday. Thursday was a bit of a continuation. Again, didn't really get close to the 200-day moving average, stalled in front of it and in front of the support at 32.441. So yeah, looking quite bright and merry over in the across the pond. So yeah.
Okay, nice.
Time to sell if I'm getting bullish.
Yeah, indeed. Right, gun to the head trade. So this is where Steve and I picked trade ideas live on the stream, as if we had a gun to our head. Each idea we come up with must have stops and targets. It must have a risk reward ratio better than 2 to 1. These ideas are closed out at 9 p.m. if they ever get there before us getting stopped out, which seems to be the case at the moment. But obviously, if they hit the target as well, they'll be stopped out before. Now we're running a live account and following these trade ideas for real. We set up £2,000 in a trading account with the Wander at the start of 2023. It's not been a great start. We're in a bit of drawdown with this at the moment, but by sticking to our consistent approach with these trades, doing them at the same time every day, risking 1% of trading capital, having good risk reward ratios, we do believe that we will turn this around at some point. So Steve, let's have a quick recap on yesterday's ideas. You were looking at silver, looking for that to slip, forming a bit of an reverse head and shoulders there, not reverse, a head and shoulders. But yeah, it sadly didn't work out. Initially it did, but then broke through that neckline and validated it quite quickly and run off to the upside. I was looking at Swiss franc Japanese yen. So this was the trade actually from the day before, but I attempted to do the same thing after getting stopped out the day before and got stopped out again on that one. Continues to grind higher in what may be a complex right shoulder potentially that's forming here. So 2 stop outs yesterday, so let's not dwell on them too much. Let's dust ourselves off, Steve, and have another look today, shall we?
Well, I'd rather cry into my pint, but we'll go again, Joe, just for the sake of the show, I suppose. The show must go on. Okay, well, I'm getting quite excited about this S&P. Because I like to sort of I like to look for like good risk reward trade ideas, and for me, this feels like a good one. Got to be a little bit aggressive about it. Obviously, looking at this bottom on a daily chart, there's far more potential to the upside than what we really can achieve in just an intraday time frame. So I'm going to look at this and set alongs, but the stop has got to be a lot tighter than I would do normally if I was to you know, really sort of like think about this trade over a slightly longer period of time. So we're trying to achieve what we are within a short time period. That's what I'm trying to say. Right, so I'm looking to get long at current levels. We're going to get long at market, risking 103%. Oh, no, we won't. We'll risk 1%. 1%. So roughly, it's about 3.9 units on here, which isn't necessarily accurate to risking 1%. It's a little bit less, as you can see, at £17.90. But because of the contract size and everything, we've got to go a little bit more. Well, I'm going to go a little up to here. So targeting a move to 40.24. No, what did I say? 40.15. 40.15's got to be the one. Targeting a move there gives us a 7-to-1 risk reward. Is that right? We've got to stop right. Stop price at 39.70. That looks too tight, Joe. 39.60. As it's 1.3 units, targeting a move up to 40.15. Is that right? Looks right.
Yeah. As long as it's 1% risk, I'm happy. There we go.
Okay, there we go. 1% risk, 18 quid, just short of that. Yeah. So.
Okay. Good luck.
Yeah. Thank you.
Okay, I'm going to take a look at New Zealand dollar versus Japanese yen. So this is potentially stalling here at a resistance of 84.98. It's in a decent move to the upside, so a big impulsive candle on the 1st of the month of March. Yesterday we posted a bit of a pullback, although held on to the newly formed support, but today potentially breaking down through that. So highly speculative, but I'm thinking that maybe this is going to have a bit of a pullback, and maybe I can take advantage of that. If we look at the intraday charts, I'm looking for, well, a few things to try and line up really. So potentially we've got a double top forming here, which would break on a move through 84.86. So it's only potential, hasn't happened yet. But we've also got a corresponding wave count, which I quite like in the short term. So we've got the 5 waves up and now in the process of forming this ABC correction. So I'm going to try and sell it at current prices, Steve, which I've got at 84.96.
Yeah.
I've got a stop loss at 85.13. And going to target a move down to 84.48, which is about 2.6 or 2.5 to 1. Looking for this to play out. Is it
selling targeting 84.38, stop at 85.13.
84.48. 84.48.
I suppose we could also adjust it afterwards. 2.7 to 1, is that right?
Yes, that's about right. Yeah.
Okay, you're on, mate. You're on. Spread's a little bit wide in there, so
yeah. Okay. Right. Okay. Data today. Let's have a look at what we've got due out. So we've already touched upon the main number, which is going to be this ISM services index. So the consensus forecasts are for a headline reading of 54.5 from 55.2 previously. So that is the main number to watch out for today. That's out at 3 o'clock UK time. That's out today. And then next week, they come thick and fast. You've got lots of central bank policy decisions from Australia, Canada, Japan. We've got a testimony from Fed Chair Powell, and we've got non-farm payroll. So it's going to be a tasty one next week. So rest up over the weekend, guys. Hopefully you've had a pretty good week with the trading, and let's get ready to go again next week.
Yeah, cheers all. Have a good weekend and good luck today.
Thank you. Cheers, Steve. See you later.
Cheers.
Bye.